Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. The article does not go into the price per gram that these companies are expecting to sell in the future. I believe Canopy Growth is expecting to sell a bud, piece of flower, for $1.73 per gram, and that's not sustainable long term. In Washington State, we've seen companies go out of business selling their entire lot, hundreds of thousands of grams, for as low as 7 cents. I would look at sales like that. I would look at 420 sales as being the future prices, and I would look at the lowest price of flower being the future wholesale price. So if we're already seeing 7 or 8 cents a gram, in the future, I would imagine that that's going to be a wholesale bottom low, kind of a B grade price point for material that you would use for edibles and extraction and other products that don't require an aesthetically pleasing bud. Having said that, if these companies like Canopy are expecting to sell at $1.73 in the future, they're probably not going to be around very long. I remember when Time Warner merged with AOL and they said it was going to be the best thing in the future, and neither one of them are relevant anymore. I tend to think that these 4 companies up in Canada are all going to become some of the first companies that go under. They're over leveraged. They're not pricing cannabis at a rate that's sustainable in the future, because that $1.73 is going to drop down to 50 cents really fast. And if they're not prepared to take on that kind of wholesale pricing, then they're already in trouble. Speculation is obviously pushing these prices higher, as well as being included into these various indexes and ETFs, all pushing up their market cap. But as individual investors kind of flee from other investment vehicles into cannabis, it's anybody's game. So invest wisely. On the market front, we saw some of the biggest cannabis companies in the world report their quarterly results. CannaTrust Holdings posted a quarterly revenue of $16.9 million, up 115% from the first quarter of 2018. 67% of that growth came from the medical channel, while a third came from the recreational arm. Tilray posted an adjusted loss of 27 cents per share on sales of $23 million. Revenues surged by 195% on the year, above estimates of $20 million. Aurora Cannabis reported deep losses on a year-over-year basis on net sales of $65 million versus $16 million in sales in the third quarter of 2018. Top cannabis stocks with a market cap above $500 million trading on U.S. exchanges performed in the following. Acreage Holdings is down 8%. Afria is down 5%. Aurora Cannabis is up almost 4%. Canopy Growth is down 6%. Kronos Group down 3%. Curaleaf Holdings down 16%. Green Growth Brands down almost 10%. MedMen down almost 5%. Organigram Holdings is up almost 13%. Private companies continue to drive cannabis merger and acquisition activity. The number of completed M&A deals in the cannabis space remains significantly higher so far this year compared to similar period in 2018, and private companies are largely leading the way. While overall number of deals is almost up 40% year to date over 2018, transactions involving private companies have nearly tripled from 15 in 2018 to 43 so far this year. Top raises that closed last week include Ianthus Capital, a New York-based multi-state operator, raised $25 million through a convertible debt transaction. Growth Industries, a private-held Rhode Island-based manufacturer of cannabinoid-enriched products, closed a private placement equity raise for $17 million. CannTrust, the Ontario, Canada-based cannabis producer, closed on a $170 million equity offering. And Phoenix-based Forefront Holdings closed on a $50 million loan to build cultivation and processing facilities linked to its planned merger with Vancouver, British Columbia-based CanX Capital. Top M&A deals that closed last week is Tetra Biopharma, an Ottawa-based medical marijuana-focused company, acquired fellow Canadian group Pang Pharma. The deal involved payment of $3 million Canadian dollars and the issuance of more than 16 million shares. Top merger and acquisition deals that also closed include Brooklyn, New York-based Better Choice, closed on 2 deals specializing in the CBD pet food industry sector. The valuation of the acquisition of TruePet and Bonafide were not disclosed. And then also NIC, the Kansas-based provider of digital government services, closed its acquisition of Denver-based Complia, which provides a technology platform for government regulations of cannabis companies. Canopy Growth closed its acquisition of Germany's C3 Group for roughly $253 million in an all-cash deal. The deal is one of the largest in the European cannabis industry so far. The cannabis sector has come under some pressure this month. Last week, the Horizons Marijuana Life Index ETF and the ETF-MG Alternative Harvest saw a negative price action of 1.4 and 1.8% respectively. Equity capital raises were the key trend of the week as the cannabis space recorded the third highest weekly amount raised so far in 2019. In total, almost $290 million was raised through equity deals just 2 weeks after the second highest week of the year when $473.5 million was raised. 21 deals raising $354 million closed this week. That compares to just 5 deals raising $44.8 million in the same period last year. Aurora Cannabis, an Edmonton, Alberta-based cannabis producer, reported fiscal third earnings revenue of 75 million Canadian dollars, up more than 365% from a year ago. The company's net loss grew to 158 million, up from 19 million a year ago. The boost in sales was fueled by growth across key markets, the company said in a news release. The revenue attributed to Canada's adult use market grew 37% from the previous quarter to 29 million, while medical cannabis sales grew 29 million, up from 12% from the previous quarter. The surging red ink reflects the company's obligations to reevaluate the convertible debt it carries on its balance sheet, resulting in losses of 101.5 million. Tilray's revenue was also up and its net loss grows on spending. Tilray, the British Columbia-based cannabis cultivator and distributor, reported revenues of 23 million for the first quarter, up 195% from the same period last year. The company's net loss, however, widened nearly sixfold on higher spending. Tilray, which reports its earnings in US dollars, said in a news release that the sales gain reflects the legalization of recreational cannabis in Canada last October, the addition of hemp food sales via Tilray's acquisition of Manitoba Harvest, and strong growth in international medical markets. Tilray's net loss for the first quarter was 30.3 million, widening from 5.2 million for the same period in 2018. Tilray said the increased red ink was mainly tied to investments in future growth, the purchase of Manitoba Harvest, and the expansion of the company's international teams. The Alternative Harvest Index, the ETF-MG Index, is a portfolio of companies. There are currently a couple of exchange-traded funds or portfolios of companies inside of them where you can buy those to kind of cushion your risk, if you will. There are a couple of indexes that exist right now for a portfolio of cannabis companies if you don't have the risk tolerance to invest in a single company. There's the ETF-MG Alternative Harvest Index. It's an exchange-traded fund. It was up 48% year-to-date. If that didn't give you enough return on your investment, there's some leveraged funds that are just coming out. So Canada is getting the first. These leveraged and inverse ETFs already exist in the real world. Direction is one of those. You can have 2 and 3 and 4x movements. So for every movement that the S&P makes, let's say it goes up 1%. If you have a 2x, it's going to go up 2%. And likewise, if it goes down, if the S&P goes down 1%, your leveraged or inverse ETF is going to go down twice as much if it's a 2x. If it's 3x, it's going to go down 3x or up 3x. It's going to move with the market at triple the speed or double the speed. In this case, it's a 2x inverse, 2x leverage. And so if you want to bet against it, that's your inverse. If you want to bet with it, that's your leverage. And so this 2x ETF is going to give you even more momentum. So if you would have invested in this, had it been available at the beginning of the year, and you were to bet on the ETF-MG Alternative Harvest Index, for example, it went up 48%. That would have doubled it at a 2x leverage rate. So although it's an interesting opportunity, I think a lot of people are going to crash and burn if or when there's a correction. But in the meantime, if you're smart about it, if you set up a trailing stop loss at say 5%, then if or when the stock dips, corrects, drops, whatever, at 5%, it'll trigger that. And then the next moment it comes down, it'll sell it. So if you have the option for a trailing stop loss, definitely look into that. These are some good gambling options. If you're wanting to put even more money down, great on both ways. You can straddle that. You can place bets against and with it. You can place bets with and against the market at the same time. So if you got money to burn and you like to gamble, this is going to be hot. It's a first leverage. It's the first inverse and leveraged cannabis exchange traded fund Already one of the world's largest markets in terms of sheer number of cannabis exchange-traded funds, Canada is breaking new ground as home to the world's first inverse and leveraged marijuana ETFs. So the Horizons ETF management said that it's preparing to launch a leveraged cannabis ETF and an inverse cannabis fund on Friday. The Beta Pro marijuana company's 2X Daily Bull ETF will lock to deliver double the daily inverse performance of the North American MOC Marijuana Index. The index tracks the daily performance of a basket of North American publicly listed companies with significant business activity in the marijuana industry. The Beta Pro Marijuana Cannabis Inverse ETF is designed to deliver the daily inverse performance of the North American MOC Marijuana Index. So if that index declines by 1% on a given day, the New Horizons ETF should rise by 1%. Horizons offers 10 double leveraged bullish ETFs and 10 double leveraged inverse ETFs and 3 non-leveraged inverse ETFs. The North American MOC Marijuana Index tracks the leading cannabis stocks operating in the US and Canada. Constituents must have a business strategy focused on the marijuana or hemp industry and are required to meet minimum trading criteria. Top components of that index include Canopy Growth, Aurora Cannabis, and Chronos Group. Some of the top cannabis investment drivers have been multi-state operators, data, and consumption lounges. And then trailing right behind that has been accurate dosing and technologies surrounding getting that precise dose so that people can really start to understand what outcome they should expect. Jim Cramer is telling investors they should take cannabis hype with a grain of salt. He said, whenever you see this kind of boom, you'll need to take a more exuberant pronouncements with a grain of salt. He called it reefer madness, and that companies like Tilray have never seen a major negative catalyst, and that its stock should never been so high in the first place. While some of the stocks of cannabis companies have performed much better than others, such as Cramer's favorite cannabis pick, Canopy, many have been too promotional for his taste. Looking at Tilray, Cramer noted that the stock shot from $100 to about $300 within a matter of days last October prior to legalization in Canada. The stock collapsed to $100 a month later and has since drifted below $50. An Israeli regulator warns of medical cannabis bubble and eyes a pact with Australia. Medical cannabis could become an investment bubble in Israel, the country's market regulator warned, as cash floods into the rapidly expanding industry where few companies yet make money. A special unit has been formed by the Israel Securities Authority to ensure that investors are protected and not being misled. The agency's chair said that Israel may expand its dual listing arrangements to include Australia as its ties to connect with more foreign markets and draw investors to recover trading volumes lost a decade ago. One of the fastest growing segments on the Tel Aviv Stock Exchange is medical cannabis, and the sector got a boost in January when the government approved exports. About 26 companies listed have a link to medical cannabis, up from 19 in December, with a combined market value of 3.4 billion shekels, or about 952 million US dollars. Most are at the early stage without revenues, which is frightening, but some shares are up hundreds of percent since the start of 2018. The agency's chair said that they don't think that they can avoid a bubble, but bubbles are part of the nature of markets, and that they can provide their insight to the right tools for managing those types of risks. Cannabis stocks may be high, but overall trade volumes are sluggish and have recouped the flows lost when they upgraded Israel to a developed market status from emerging in 2010. Tel Aviv share volumes averaged 1.1 billion shekels a day between January and April, down almost 20% from last year's average and half the levels of a decade ago. To help lure new investors, they've forged a dual listing partnership with new markets in New York, Toronto, London, Singapore, and Hong Kong. Already about 20 Israeli companies are listed in Australia, and Australian groups own about 10% of the Tel Aviv Stock Exchange. Israel was one of the first countries to early on invest in medical marijuana and research. So it's no surprise that they're jumping on board after Canada to try and bring in some of that institutional money. Clearly, their stock exchange is dipping and research is becoming more global. And this just seems like a low-hanging fruit for them to pull in some more revenue and investment opportunities. You'll never guess who's betting against Canadian cannabis stocks. Curaleaf Holdings is the largest multi-state operator focused on tightly regulated cannabis markets along the East Coast. And Curaleaf's executive chairman, Boris Jordan, also runs Measure 8, a venture fund that recently stirred up some controversy with the questionable acquisition. In the near future, Measure 8 wants to launch a hedge fund that'll bet on U.S. marijuana stocks and against Canadian cannabis producers at the same time. But here's some reasons that the strategy might make sense and some reasons that it won't. The sales explosion that adult use cannabis legalization was supposed to ignite is a dud. According to Statistics Canada, inventories rose in February compared with January while sales declined, and it's not hard to see why. Health Canada insists on putting public safety ahead of the industry's needs. Plain packaging rules will make it extremely difficult to build a recognizable brand, and Health Canada also intends to limit the amount of THC that can go into edibles and beverages to a low level to affect around 6% of the country that uses cannabis daily. Perhaps the biggest reason to bet against Canadian producers is the oncoming glut of licensed cannabis. The 10 largest cannabis producers could soon be able to produce 3.3 million kilograms annually, and there are over 100 smaller producers flooding an overall market that wasn't exactly starved for cannabis in the first place. If we annualize total sales from the first 2 months of 2019, it looks like Canada will only need around 540,000 kilograms of licensed cannabis this year. If this figure doesn't start raising again, Aurora Cannabis will soon be able to supply the entire Canadian market for licensed marijuana while running at half capacity. Canopy Growth will soon be able to grow enough licensed cannabis to supply the entire country as well, but it's unlikely to see a great deal of sales growth while sharing the Canadian market with Aurora and dozens of small producers. Even though Canopy and Aurora are losing money now, their combined market value at the moment is a stunning $24.7 billion. Once more investors realize how difficult it would be for these businesses to simply break even, their stock prices will tank. And on the flip side, in the US, annual legal marijuana sales climbed to $10.4 billion in 2018, and there's still plenty of room to grow. In 2017, annual demand for recreational cannabis, state legal or otherwise, was estimated at $50 billion. Some companies selling cannabis in the US are actually making money. For example, Florida-based True Leaf Cannabis reported $75 million operating profit last year. During the same period, Aurora's operations lost $60 million and Canopy Growth lost a stunning $339 million. While there are no limits to a short seller suffering when stocks rise unexpectedly, Canopy Growth, Aurora Cannabis, and many other giant Canadian peers will never run all of their greenhouses at full capacity, but markets can behave irrationally a lot longer than you might remain solvent. The NFL and the Players Union have finally agreed to study cannabis as a pain treatment. CTE, or chronic traumatic encephalopathy, is just chronic brain damage from concussions and repeated head injuries. A lot of football players have them, as well as other athletes. And so with members kind of coming out of the woodwork recently, or not even recently, but in the past couple of years, Marvin Washington out of the NFL, and Kyle Turley, Ricky Williams, a lot of other athletes as well. Early on in the NBA, Cliff Robinson kind of came out about 5-6 years ago. And so more and more athletes are coming out to try and gain access to cannabis and its therapeutic medicinal benefits. NFL has been staunch against it. And so this is a huge opportunity to kind of not only normalize cannabis, but to showcase that there's an alternative to what the NFL has been pushing, which is just major amounts of opioids. A lot of these players know, and in fact, some have come out just recently saying that they used it in the NFL and had advance notice of the testing, so just stopped a month or two prior. But that's how they were able to endure and last in their careers, is the use of cannabis. So all in all, this is a pretty good movement. It's an opportunity for a lot of those conservative states to see the medicinal benefits, and having the NFL kind of lead that charge for people that may not otherwise see those kind of news stories. The NFL is bringing that to the sports arena, and individuals that may not otherwise see the medicinal benefits of cannabis. The move signals a potentially huge shift for the league, which doesn't allow players to use cannabis for pain. Several former players and a few current ones have been outspoken about the possible pain relief benefits of cannabis, especially in contrast to the league's sanctioned opioids. Several players have said that they fear the addiction potential of opioid medications, which have been heavily prescribed to some players, and worry that they may leave players in a fog. The NFL's Commissioner Roger Goodell has said previously that the league might consider a change if medical science clearly establishes that cannabis was effective for treating pain. Earlier this year, the NHL Alumni Association partnered with Canopy Growth Corp to research the efficacy of cannabinoids in treatment of post-concussion neurological disease. The NFL's league and the Players Union will form two committees to provide medical recommendations. The committees will also review league and team policies and practices surrounding prescription painkillers. Any major policy changes that would need to be negotiated through the league's collective bargaining agreement with the Players Union. The league and the union negotiate the terms of the current drug policy, which is administered by the league and the union jointly. The current collective bargaining agreement runs through the 2020 season. Hopefully we'll see CBD and THC on the approved list after that 2020 season. Time will tell. More and more, we're hearing about incorporating CBD and cannabis beverages into workouts. An active cannabis lifestyle is not just that old worn out cliche of indica being the couch lock. There's a lot of sativas and uplifting euphoric effects that you can get from terpenes alone, combined with CBD. And so while the growing popularity and acceptance of cannabis and CBD or more applications are being explored, most eyes have been on cannabis drinks as a substitute for beer. But Brightfield Group data has found that many cannabis drink users are actually turning to cannabis beverages to complement their workout routines, either to get in the zone for their workout or to aid with recovery. A Brightfield Group study from last year shows that the current cannabis drink consumers, more than 68%, report using cannabis drinks either before or after a workout or yoga practice. Most cannabis drink consumers, 78%, are heavy users consuming cannabis at least 5 times a week. For many of these users, the cannabis is a core component of their identity and is integrated closely into the key aspects of their everyday lives. They use this when they're relaxing at home. They use to get them through their workout. And increasingly, they use to achieve the desired effects both before and after a workout. This is a trend that should be kept top of mind as companies are considering new product launches and positioning of key cannabis and CBD brands. How can cannabis and CBD products optimally integrate with the pre-workout and post-workout recovery regimen? As innovative abounds in the cannabis and CBD space, more companies are positioning their products for sports and workout. Brands such as Canna4 Supplements have already begun to enter the market with CBD whey protein, but the market is still in its infancy. Their lines of functional powder drink mixes have a distinct positioning for a well-defined niche consumer segment interested in specific styles of fitness. Green Road's World has developed a brand dedicated to athletes and the fitness-minded, Green Roads Athletics. Recently sponsoring the North American Premier Basketball League, this new positioning will clearly align the recreational athletic segment needs with existing CBD product benefits. Another player in the emerging market space is Isodial. There are a few product offerings for this brand, but one line in particular might appeal to fitness enthusiasts and athletes, Hennaplex. This CBD-infused water is positioned as a means to boost stamina and clarity, which make all the difference in finishing a set for the unseasoned gym goer. If Coca-Cola's and the Gatorade franchise do enter CBD, as a recent headline suggests that they're considering, this is sure to promote the further development of CBD or cannabis drinks as the functional ingredient for sports workout usage and recovery. I'm a huge proponent of a 1-to-1 CBD to THC ratio. I enjoy a sativa dominant strain, and so that particular ratio for me works really well to help me keep in the zone, as well as make me feel like the recovery is faster. I'm not as sore. My endurance is longer, and I'm able to kind of push through that workout even more. And so the results that I feel I've gotten over the last 2 years have been better than the previous, 5 years prior. And I feel like maybe there's less injuries. I do stretch a lot more now than I did before to try and prevent those injuries. But with the addition of CBD and THC, those workouts are more intense, and yet the recovery is a lot quicker. I feel like there's a lot of advantages, especially in other products like a transdermal patch. If you're a runner, for example, it really helped me to climb the Space Needle, which is about 55 stories. I did it in 10 minutes, which for a smoker like me is pretty good. So if you use a transdermal patch on your lower back or your neck, for example, it's really going to help. That was just a straight CBD patch too. It didn't even have the entourage effect with THC. So a lot of those CBD products are snake oil. Without adding some THC, the CBD is going to sit on top of that CB1, CB2 receptor cell. I believe it's not going to be fully welcomed into that receptor, if you will, without the addition of THC. So this is a little bit outside of my scope. I'm more into business, but from my understanding, you need some THC in order to get the full effects. And so maybe CBD is a gateway for that future 1-to-1 ratio. But right now, it's just a good thing that we're kind of seeing more publicized articles like this where CBD and workouts are becoming the norm, adding more beverages and CBD to your workout. More and more companies are jumping on to the wellness trend. You're having more options with kombucha, cold brew, gluten-free, vegan options. And while it may not be mainstream quite yet, it is definitely trending. You're seeing companies adding cannabis to smoothies or pairing it with herbal supplements to target new class of consumers. Some cannabis companies are combining CBD with various nutritional supplements and herbs as ascribe benefits to the resulting product that aren't necessarily real. These products target health-conscious consumers who are older and more predominantly female than cannabis core customers groups who are young men who want to get high. Los Angeles is said to be the world's largest cannabis market and is also the world capital of dietary restrictions. Various wellness-oriented brands infuse weed into the dietary fads which arrive with the tides, and one can buy gluten-free edibles, paleo edibles, and cannabis-infused kombucha. Companies pair cannabis with ginseng to promise focus or melatonin to promise sleep. Some companies are offering strains like kosher kush, although whether religious Jews can consume cannabis is a complicated question. Other brands appeal to users who like to get high before the exercise. Over the course of the day, companies hope consumers might take various cannabis products as a substitute for both headache medicine and after-workout cocktails. For many companies, it also includes addressing ailments such as insomnia, anxiety, and pain. The article goes into an interesting turn, showing a massive amount of bias when it says that the industry is mostly associated with the not especially desirable demographic of young men without enough to do. The industry's central mission is to reinvent this stigmatized and niche intoxicant as a mass market product, and to opponents, the industry is predatory and repackaging intoxication as well-being, and intended it may all be an elaborate mechanism to help people rationalize their urge to get high. Can't get high on CBD, but hey, what does the Guardian care? When in fact, the CBD is a anti-inflammatory, and if whoever wrote this actually tried it, they might know that CBD doesn't get you high, but apparently Alex Halperin doesn't really care. You know what they say though, bad news is good news. So maybe just kind of people reading this will be able to see and think for themselves, maybe hopefully be able to rub a couple of brain cells together and figure out that CBD does not get you high, and that in fact it is a wellness supplement that you can use within your workouts. Ultimately, if companies don't differentiate, they're going to go to the wayside with the legalization with the Farm Bill back in October of 2018 that legalized hemp, that legalized CBD. And so there's a lot of mom and pop shops out there offering CBD with their brand on it, but without differentiation or adding a niche, neat, new experience. They will all go to the wayside when it's commoditized and prices race to the bottom and no one can afford to stay in the game, which makes branding even that more important to help them stay afloat. The cannabis industry has always had a bit of an identity crisis in terms of branding, and after all, the plant has been both medicinal and euphoric-inducing properties, so it appeals to different types of people for different purposes. CBD is a cannabinoid with analgesic and anti-inflammatory properties similar to THC, but it differs in an important way. It doesn't induce any psychoactive effects, so this means that while there's a significant overlap between consumer bases for the two types of products, THC is limited to people who are open to feeling quote-unquote stoned to some extent. CBD-only products, on the other hand, appeal to all adults who lead a healthy-oriented lifestyle or want a natural way to relieve physical and mental stress. This could be the product line that exposes cannabis to an entirely new market segment made up of those who have never considered the plant before, strictly because they were turned off by THC's psychoactive effects. If CBD manufacturers are to target this segment successfully, they'll need to make sure that their marketing and positioning strategy resonates with that type of user. So to understand this market better, Brightfield Group has conducted intensive research on CBD-dominant goods, including those derived from cannabis and others on hemp. Hemp and cannabis differ in many ways, but most notably in this case, hemp varieties of cannabis contain only negligible amounts of THC by nature, so hemp CBD producers specialize in medicinal products by default. The majority of marijuana-derived CBD products, on the other hand, are released as line extensions by companies that also specialize in THC-dominant products, which could be oriented towards either medical or recreational consumers. While there are many differences between the two sides of the industry, one that made Brightfield's analysts scratch their heads was the difference between the top-selling product subcategories in the hemp and marijuana-derived CBD markets. For hemp-derived CBD tinctures and oils, consumption formed focus on the ease of medicating up to nearly half of the total market. In the cannabis-derived market, on the other hand, tinctures and oils comprise just under 8%. Conversely, in consumer surveying conducted by Brightfield, the cannabis-derived CBD users did not report a higher preference for sugar candies than hemp users did. In fact, CBD users across the board ranked vape cartridges, tinctures, oils, and topicals as top choices. So why are cannabis-derived CBD sugar candies selling so much more? According to the Brightfield data, sugar candy is the top-selling edible subcategory in the cannabis market at large, comprising 15% of all non-flower sales in 2017. So it makes sense then that cannabis manufacturers launch CBD products as extensions of those lines, thinking of them as product variants. But if they want to tap into new market segments who will use the product as a complement to their wellness-oriented lifestyles, selling candy that appeals mostly to recreational consumers is not the best approach. Manufacturers hoping to successfully market and sell CBD-dominant products must rethink both their development and brand strategies altogether. So if you're thinking of launching a CBD line, it may be worthwhile to ask yourself the following questions. Is my flagship product more popular with recreational consumers or medicinal consumers? And given what I'm producing, can my brand potentially resonate better with recreational users or medicinal users? As a business owner, it can be challenging not to get bogged down in day-to-day tactical decisions at the expense of making thoughtful, long-term strategic decisions. But if you're considering launching or improving your CBD line, comprehensive and actionable insights can help you ensure your marketing strategies are contributing to brand equity and not holding you back from reaching your potential. I can honestly say that I don't buy edibles at stores because they're capped at 100 milligrams of THC. It's simply just not enough for a heavy user like myself. But not only that, it tends to be a lot of chocolate and milk chocolate. So somebody who doesn't do dairy or wheat, I try to reduce the amount of sugar and alcohol intake as well, sort of living somewhat paleo or Whole30 lifestyle. For me, means that nothing I can eat is in this rec store for edibles, very much like going to a Handy Mart. It's all milk chocolate or candy flavored chocolate. There's not even cacao in there. It's not even chocolate. So a lot of these stores have chocolate dominant edibles with a very low THC content. And so that combination is not, for me, I'm not their target market. And so hopefully with a more open marketplace, that CBD products will show that people are looking for maybe a gluten-free or vegan or just a healthier dark chocolate. Something with 70 or 80% dark chocolate is going to be better than milk chocolate, even though when I could eat dairy, that was my favorite. Now I can't, and so I want somebody else to produce something that is more of a superfood, which is going to be that CBD dominant, healthy oriented individual who wants that active cannabis lifestyle. And as we're seeing more and more companies and athletes branding towards an active cannabis lifestyle, we're seeing the runners and the athletes, people going to the gym that are trying to recover from a high interval intensive training or just a sweaty hot yoga mess. Somebody that wants that anti-inflammatory or something with just terpenes even to kind of reduce some stress. There's a lot of these options now for a more wellness, health-oriented individual. Brand loyalty is a major topic in any industry today, in particular in the cannabis industry. However, brand loyalty can be a tricky concept. So what exactly does it mean? How is it achieved or measured? And what are other tangible effects of strong brand loyalty? So this company, Brightfield Group, has researched some top brands in the cannabis industry as to why consumers select them. And what they found in the research of medical cardholders is that brand loyalty is a significant driver in purchasing decisions. So using the edibles market as an example, they found that 73% of consumers have a favorite brand. And once they find it, they're extremely loyal, with 60% of these consumers choosing that brand at least 3/4 of the time. Quote, brand loyalty is as important to the cannabis industry as any other, and perhaps more, because there are no long-established dominant brands, end quote. That's a tremendously powerful when you break down the numbers. Take California's edible market, for example. It's worth about $250 million right now, and it's projected to grow at $1.2 billion by 2019. The implications for existing brands is that they should exploit their first mover advantage, expand their footprint, and increase market share as fast as possible, because the next stage in the industry's life cycle is consolidation, where scale becomes essential. However, in this industry, expanding the footprint isn't so easy with the current regulatory challenges. That said, some brands are starting to do it, such as Chiba Chews and Bang, which are top 10 edible brands in multiple states, but there's a long way to go. Brand loyalty is important to the cannabis industry as any other, and perhaps more, because there's no long-term established dominant brands. The field is wide open, and although there are challenges to building that loyalty, the revenue potential is huge. Ultimately, if companies don't differentiate, they're going to go to the wayside with the legalization with the Farm Bill back in October of 2018 that legalized hemp, that legalized CBD. And so there's a lot of mom and pop shops out there offering CBD with their brand on it, but without differentiation or adding a niche, neat, new experience. They will all go to the wayside when it's commoditized and prices race to the bottom and no one can afford to stay in the game, which makes branding even that more important to help them stay afloat. The cannabis industry has always had a bit of an identity crisis in terms of branding. And after all, the plant has been both medicinal and euphoric inducing properties. So it appeals to different types of people for different purposes. CBD is a cannabinoid with analgesic and anti-inflammatory properties similar to THC, but it differs in an important way. It doesn't induce any psychoactive effects. So this means that while there's a significant overlap between consumer bases for the two types of products, THC is limited to people who are open to feeling quote unquote stoned to some extent. CBD only products, on the other hand, appeal to all adults who lead a healthy oriented lifestyle or want a natural way to relieve physical and mental stress. This could be the product line that exposes cannabis to an entirely new market segment made up of those who have never considered the plant before, strictly because they were turned off by THC's psychoactive effects. If CBD manufacturers are to target this segment successfully, they'll need to make sure that their marketing and positioning strategy resonates with that type of user. So to understand this market better, Brightfield Group has conducted intensive research on CBD dominant goods, including those derived from cannabis and others on hemp. Hemp and cannabis differ in many ways, but most notably in this case, hemp varieties of cannabis contain only negligible amounts of THC by nature, so hemp CBD producers specialize in medicinal products by default. The majority of marijuana-derived CBD products, on the other hand, are released as line extensions by companies that also specialize in THC-dominant products, which could be oriented towards either medical or recreational consumers. While there are many differences between the two sides of the industry, one that made Brightfield's analysts scratch their heads was the difference between the top-selling product subcategories in the hemp and marijuana-derived CBD markets. For hemp-derived CBD tinctures and oils, consumption formed focus on the ease of medicating up to nearly half of the total market. In the cannabis-derived market, on the other hand, tinctures and oils comprise just under 8%. Conversely, in consumer surveying conducted by Brightfield, the cannabis-derived CBD users did not report a higher preference for sugar candies than hemp users did. In fact, CBD users across the board ranked vape cartridges, tinctures, oils, and topicals as top choices. So why are cannabis-derived CBD sugar candies selling so much more? According to the Brightfield data, sugar candy is the top-selling edible subcategory in the cannabis market at large, comprising 15% of all non-flower sales in 2017. So it makes sense then that cannabis manufacturers launch CBD products as extensions of those lines, thinking of them as product variants. But if they want to tap into new market segments who will use the product as a complement to their wellness-oriented lifestyles, selling candy that appeals mostly to recreational consumers is not the best approach. Manufacturers hoping to successfully market and sell CBD-dominant products must rethink both their development and brand strategies altogether. So if you're thinking of launching a CBD line, it may be worthwhile to ask yourself the following questions. Is my flagship product more popular with recreational consumers or medicinal consumers? And given what I'm producing, can my brand potentially resonate better with recreational users or medicinal users? As a business owner, it can be challenging not to get bogged down in day-to-day tactical decisions at the expense of making thoughtful, long-term strategic decisions. But if you're considering launching or improving your CBD line, comprehensive and actionable insights can help you ensure your marketing strategies are contributing to brand equity and not holding you back from reaching your potential. I can honestly say that I don't buy edibles at stores because they're capped at 100 milligrams of THC. It's simply just not enough for a heavy user like myself. But not only that, it tends to be a lot of chocolate and milk chocolate. So somebody who doesn't do dairy or wheat, I try to reduce the amount of sugar and alcohol intake as well, sort of living somewhat paleo or Whole30 lifestyle. For me, means that nothing I can eat is in this rec store for edibles, very much like going to a Handy Mart. It's all milk chocolate or candy flavored chocolate. There's not even cacao in there. It's not even chocolate. So a lot of these stores have chocolate dominant edibles with a very low THC content. And so that combination is not, for me, I'm not their target market. And so hopefully with a more open marketplace, that CBD products will show that people are looking for maybe a gluten-free or vegan or just a healthier dark chocolate. Something with 70 or 80% dark chocolate is going to be better than milk chocolate, even though when I could eat dairy, that was my favorite. Now I can't, and so I want somebody else to produce something that is more of a superfood, which is going to be that CBD dominant, healthy oriented individual who wants that active cannabis lifestyle. And as we're seeing more and more companies and athletes branding towards an active cannabis lifestyle, we're seeing the runners and the athletes, people going to the gym that are trying to recover from a high interval intensive training or just a sweaty hot yoga mess, somebody that wants that anti-inflammatory, or something with just terpenes even to kind of reduce some stress. There's a lot of these options now for a more wellness, health-oriented individual. Brand loyalty is a major topic in any industry today, in particular in the cannabis industry. However, brand loyalty can be a tricky concept. So what exactly does it mean? How is it achieved or measured? And what are other tangible effects of strong brand loyalty? So this company, Brightfield Group, has researched some top brands in the cannabis industry as to why consumers select them. And what they found in the research of medical cardholders is that brand loyalty is a significant driver in purchasing decisions. So using the edibles market as an example, they found that 73% of consumers have a favorite brand. And once they find it, they're extremely loyal, with 60% of these consumers choosing that brand at least 3/4 of the time. Quote, brand loyalty is as important to the cannabis industry as any other, and perhaps more, because there are no long-established dominant brands, end quote. That's a tremendously powerful when you break down the numbers. Take California's edible market, for example. It's worth about $250 million right now, and it's projected to grow at $1.2 billion by 2019. The implications for existing brands is that they should exploit their first mover advantage, expand their footprint, and increase market share as fast as possible, because the next stage in the industry's life cycle is consolidation, where scale becomes essential. However, in this industry, expanding the footprint isn't so easy with the current regulatory challenges. That said, some brands are starting to do it, such as Chiba Chews and Bang, which are top 10 edible brands in multiple states, but there's a long way to go. Brand loyalty is important to the cannabis industry as any other, and perhaps more, because there's no long-term established dominant brands. The field is wide open, and although there are challenges to building that loyalty, the revenue potential is huge. Wick and Mortar is an online cannabis branding company. They rebranded recently from Online Marijuana Design to Wick and Mortar. And so with that, they kind of created a rebranding guide. Jared Mirsky is one of the founders of the industry, not just with Wick and Mortar, but he's been around for a long time, I think 10 years. I've known him for about 4. And to see him scale himself, to see him rebrand, to see him grow has been phenomenal. And so I wanted to share this rebranding guide. The folks over at Wick and Mortar go on to say that in branding, as in life, things evolve, perceptions change, and without adaptation or change, what rises will fall. At some point, most companies will face a choice: change perceptions and evolve the brand, or become irrelevant. It's a natural process, one experienced by established companies and startups alike. Despite incredible industry growth, cannabis brands are not immune. As an industry undergoing such rapid evolution, it should be expected that companies regularly take stock of their brand and chart new courses. Some moves will be drastic, others incremental. Many will rebrand or refresh, while other brands will undertake a complete overhaul. Whatever process you settle on, the ultimate goal is to invest and re-energize your brand. You will learn how your brand is perceived by audiences and competitors alike, and the factors that are unique to it. Despite the unique variables facing each brand, there's a few general considerations to think about when deciding to rebrand. This rebranding guide will help shepherd you through the process. Not only will it help you decide if it's time to make one of those most vital investments to your brand, but how you can go about evolving its identity and perception. That's from founder and CEO Jared Mirsky. Rebranding versus refreshing. How to tell if your company needs a rebrand or a refresh. So rebrand typically involves a complete teardown of a brand and a carefully crafted rebuild. A refresh, on the other hand, is a more modest tinkering with the brand to respond to marketplace changes. And to further distinguish them, there are some things to think about when considering a rebrand or refresh. So to rebrand, you have a change in a company's focus, outdated company identity, weak product reputation. You have plateaued or falling revenues. You have to overcome bad press, and you have new visual identities and logos. With the refresh, you have a new visual identity and logo. You can maintain audience appeal. You have minor adjustments to market trends, and you're focusing on social responsibility. When combining refreshing and rebranding, you have marketing new products or services. You're finding new customers. You have a fresh storytelling and messaging, new social media strategies, and new sustainability practices. There's 3 things to consider when rebranding. You need to research and discovery, reasons to rebrand, and number 3 is the benefits of rebranding. Number 1 is research and discovery. In a rebrand, simply swapping out the logo won't do. The rebranding process begins with research into the cannabis marketplace and some personal reflection by the company. You'll need to analyze what isn't working for your brand, looking at existing and new market spaces and your company's success and potential within them, respectively, will help chart a new path for a full rebrand. During the research phase, figure out what differentiates your business from other cannabis companies. If differentiation is marginal, think about where the company can go to achieve it. After research and discovery, the more radical changes of rebranding commence. What follows is a step-by-step process for a rebrand. You need a creative brief, a brand mood board, naming process, logo design, brand strategy and copywriting, and stationery and social media graphics. Here are your 3 steps for rebranding. Number 1 is a creative brief. Creative brief is a vision, a guidebook to realizing a rebrand. A creative brief is a vision, a guidebook to realizing a rebrand. The brief is a document for thinking about where your company wants to be and how you plan to get there. It sets the stage for everything that follows. Number 2 is a mood board. Next, put together a brand mood board. Much like a storyboard in the world of filmmaking, this mood board will help marketers and designers craft an accurate brand imagery and story for its audience. Number 3 is the naming process. So what's in a name? For brands, it's quite a lot. If your company wants a new name that one more accurately communicates its identity, or if it never had a good one in the first place, naming the brand will be vital. Is the new name memorable? Does it have certain aesthetics ring to it? Does the brand name clearly communicate the products and culture and appeal to the demographics you're after? So if these and other questions are important considerations in the naming process. Number 4 is the logo design. Like the name, a company's logo communicates the brand identity. A good brand name and logo work hand in hand. As a visual graphic, the logo should communicate a brand's value, products, and services almost instantaneously. Think of Apple or even Starbucks. Both have simple yet highly impactful logo designs. When done well, your logo should become a powerful and sticky symbol in the minds of your audience. Brand strategy. Launching a brand identity, whatever its root cause, will need finessing. That's where brand strategy and copywriting becomes a vital part of any brand success. Since branding is perception, crafting attention, meaningful visuals, as well as engaging text for advertising campaigns, the company website and stationery and social media graphics will become incredibly important. In the short term, this part of the process will help a company reach its audience, and over the long term, it'll keep them interested in the brand. Again, factors for requiring a rebrand will be variable for different companies. It's helpful for brands, especially in this rapidly evolving market, to understand the factors that might necessitate a rebrand. So let's review in a little bit more detail. You need a new product launch, market saturation, repositioning, you're outdated, if you have a company merger, going international, or you have a demographic or market change. Perhaps your company is launching a new product line because your current products aren't selling. There could be several reasons for this move. A new audience demographic has arrived and these individuals are in search of something fresh instead of established. Alternatively, your products may have outgrown your current brand. An example of this scenario could be a company with a largely regional focus expanding nationally. On top of all of this, your company might have skipped steps in the early branding process, like creating a vibrant visual identity and logo, differentiating product, and so on. And there's market saturation. Last year, chocolate and gummy sales were strong. According to BDS Analytics, they were among the top 10 cannabis product trends of 2018. So suppose that your business founded a few years ago to sell flowers, pivoting into edibles. The goal is the high-end cannabis chocolates that wouldn't look out of place at an artisanal chocolate factory. Maybe you want to evolve that concept of gummies, making it artisanal as well, instead of just a nostalgic throwback to the gummy bears of childhood. You put the plan into action, but despite great taste and pleasant effects, the market saturation hits the edibles market and sales are weak. So what went wrong? Well, perhaps your company's edible products aren't standing out amongst the competitors. Why? It could be down to the factors like packaging, logo, communications, and storytelling. New logo and packaging combined with good marketing communications will help your brand reach audiences with your artisanal edible offerings. Imagine your cannabis retail brand has a bad reputation. Several years ago, it suffered under a weak social and environmental responsibility. The company has poor workplace diversity and isn't sourcing cannabis from sustainable farms and operations. By repositioning, a cannabis brand can overcome this bad reputation. For one, your brand can take steps to focus on diversity and inclusion in the workplace, but beyond simply altering hiring practices, the company could join or launch local efforts to support and enhance gender and racial diversity. In such a brand's case, a proactive approach would be better than sitting on the sidelines. As for environmental responsibility, a brand could explore various ways of implementing sustainability into their business model. A lot of this will come down to sourcing of cannabis products from sustainable farms, as well as food and beverage companies. But it doesn't end there. A brand can also work on projects related to energy usage and the retail outlets. A campaign that communicates these business practices from the brand website to the social media channels will help in creating a successful repositioning of the brand. What if you're outdated? So imagine your cannabis brand has a bad reputation. For several years, it suffered under weak social and environmental responsibility. The company has poor workplace diversity, is in sourcing cannabis from sustainable operations. By repositioning, a cannabis brand can overcome this bad reputation. What about a company merger? So if you're a cannabis retailer on the East Coast with a few Midwest outlets, let's say you're merging with a large West Coast retailer that has funding and business infrastructure to establish a national brand, since your brand might be unfamiliar to a vast swath of the country, a rebrand is probably in order. A rebrand of two merged companies will have to achieve several objectives. Brand messaging will have to be combined and refined. The logo will have to be reworked, as will packaging, out-of-the-home advertising, online design, and social media campaigns. In the merger process, certain products will be prioritized over others. Some products might be discontinued, and some new ones might be introduced. A rebrand will have to reflect these changes and communicating them to customers in each brand's respective region. What about going international? In 2015, if you created a cannabis product in Olympia, Washington, it's a hint that you're steadily expanding nationally in the wake of state legalization. But you have much larger plans. You want to take the cannabis beverage international. Canada legalized marijuana in 2018 and it's close to Washington, so you feel that your brand could find a new market just to the north. So there's many things that brand will need to think about in such a scenario. First, Canada's compliance and regulations might be different than Washington's and other US states. Packaging will have to communicate to the buyers various safety and legal buyer information as well as restrictions on international transport. Communications will likely have to be tinkered with to appeal to a local Canadian demographic. Messaging that works in Washington might fit well for nearby Vancouver, BC, but not the Providence of Alberta, and certain areas of Canada might be more receptive to new cannabis drinks than others. A rebrand will help your company chart the right path. The price points will also vary, so market research into pricing, demographics, and messaging will help your brand adjust to the nearby but different international market. And what about demographic and market changes? So picture a scenario where a cannabis brand markets its products to the youth demographic. 19 to 34 years old constitute a major market demographic, but every 5 to 10 years, it's going to change as new generations transition into it. Those cannabis brands can make the adjustment to target a new demographic, will win brand influence and market share. So look at Adidas. During the 80s, Adidas wasn't the hit brand with youth that it is now. It still had influence in the shoe and apparel industries, but it didn't have a cultural cachet or impactful brand influence to enhance its market share. As the older millennials transitioned into adulthood and the younger ones came of age, Adidas offered new products to the so-called athletic wear category with a brand strategy that focused on collaboration, digital marketing, and social media influencing. Similarly, a cannabis company focused on the youth demographic needs to watch for newly dominant trends. A rebrand will allow such a company to research what's happening within subcultures and the wider culture and calibrate their products or services appropriately. YouTube and Instagram videos, for instance, would be a great way to reach this demographic, but in the future, what once worked will inevitably change. The rebranding process will allow brands to stay current and relevant, especially as media and technology change. If done right, a rebrand has many positive effects. Overall marketplace relevancy is near the top of this list. No brand, whether inside or outside of the cannabis industry, wants to face a market where established and potential demographics lack brand awareness or could care less about the brand. Below are a few of the benefits of rebranding campaigns. You can increase sales, increase trust, you have better technology, you attract top-tier talent, you have interest from potential investors, and additional intellectual property. So some of the benefits of rebranding include increased sales. A rebrand is an investment, and those brands that make an investment will see a return on it, or rather several returns. For one, a rebrand will be good for sales. Before Steve Jobs rejoined Apple, the Silicon Valley company was seeing quarterly revenues fall for years. Jobs' Apple rebrand, which included the new logo, products, and marketing campaigns, lifted the tech company's fortune, leading to a $1 trillion valuation last year. For companies in the cannabis industry, there can also be a return on investment with a rebrand. Logo changes, new website designs, new social media content, all of these things and more will help cultivate a more aware and loyal audience, and with that comes sales growth. You also have an increased trust. If successful brands communicate several thoughts and emotions to its audience, some are near instantaneous and others take some more time to develop. But any company should want their brand to instantly communicate trust in its audience. A good rebranding campaign will nurture an increase in trust. The product or service must innately generate trust, which can be cultivated by proper brand identity and communication. Another benefit is better technology. Powerful brands that make the best use of the most cutting-edge technologies. With a rebrand, a company can invest in technologies helping them to deliver a better product or overall experience to their audience. Cannabis company that wants to rebrand for mobile e-commerce will have an advantage over a company that resists such change. Other technologies like virtual or augmented reality will allow brands to better engage with their audiences. Better technology will also sustain and enhance relevancy in the eye of the audience. If your brand isn't moving with the times, especially technology, the times will pass it by. Technology becomes obsolete, and so do brands. So disrupt this natural process with the innovation tools at your disposal. Another benefit is attracting top-tier talent. As cultural, relevant, innovative brands also yield human capital, top-tier talent wants to work for those brands that create products and experiences that matter to people. Beyond the brand's products, they want to be a part of a culture that shares their values. If a brand is bordering on cultural irrelevance, the best talent won't come flocking. With such talent, new and fresh ideas will follow, strengthening your brand for the future. Another benefit is interest from potential investors. In a successful rebrand, audience perception will enhance commercial value beyond the product or service offered. This is brand equity. When a brand has this, the business isn't just attractive to customers, it's attractive to potential investors. Not all cannabis businesses will need investors, but those looking to grow their market share or even just move into another market space will create a more attractive brand for investors. A successful rebrand will prove that your brand is worthy of investment. Another benefit is creating additional intellectual property. This can relate to a market saturation in the cannabis industry. With the overuse of terms like imagery, many companies' branding efforts have lost stickiness in the market. IP acts as kind of like a glue to the customer's memory of you. Heavily differentiating your brand and creating distinctiveness in its design can only provide it with a stronger first impression. By rebranding, there's a potential to build your stronger association with your brand through utilizing new and distinct designs, naming, and identity. When we look at rebranding in this way, it can be seen as a much more comprehensive service than simply creating a different name and logo. By targeting specific demographics, we narrow the scope of how brand is viewed amidst the noise that now dominates the cannabis industry. And with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.